Hey there, random internet strangers. It's Random Crypto Guy with the worst crypto channel on YouTube. Dun 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 dun. Coo 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 coo. Hooray! Bow chicka bow wow. Bitcoin and Ethereum are stuck in a rut, clearing up Divergence once and for all, staking on the Ellipal cold wallet, and Asian Forex scalping, I hope. Been trying to get to that. I'm trying to cram a little bit more. So in this 15 minutes, let's get right to the charts. We're going to go right to Bitcoin daily. Here's my big messy chart. I don't have the SSL up to make it a little bit clearer. And you can see we've still just been bouncing around in between these two, this supply zone, the mother of all reversal zones, and this demand zone right here that formed up, and then we had a secondary form up here. Still getting higher lows, and the lower highs, so we're wedging up into this, and we've only dipped into this demand level really one time, and we just kind of just grazed it here, and now we're actually forming up a new demand level where we had all that crazy action a couple days ago with the 4-hour BART, which happened here. I thought it might happen here, but apparently it decided to happen here. I knew it was going to happen sooner or later. And I'm going to get to that in another video, what creates those BART patterns. And you can see it on the 4-hour. Let me just zoom in here real quick. There's your Bart Simpson pattern right there. Looks like Bart Simpson's head. But you can see that there's really nothing new to talk about. We either have to break below this daily demand level at 87, 86, around that area, around 87, or bust through our high at 10.5, which everybody and their brother talks about that, so I'm not going to talk about that. Let's move on to Ethereum. Same thing going on here. We have a new, this is a turncoat supply zone in the daily, and it's coupled with, you got some trend lines and the daily support as well right there, and then a 4-hour build on top of it. So that's going to be a pretty good area right there for a good buy order. As you guys have, if you've been following me, you know that I'm trying to buy as much Ethereum as I can. I missed on this candle here, this candle right here, I missed by 9 cents. Actually on this is showing right here, 22.90 or $225 approximately. I had mine set at $224. I mistakenly said it was 9 cents, but I missed it by $1. But that happens more often than I care to think, care to imagine. So I'm going to probably move that limit buy up to around here somewhere, closer to like maybe 230, maybe 230.50, something like that. I think I set it at 230. I'm not sure. I'll have to go back and look at it. To catch this next little dip, I suspect it's going to bebop in between these two for a while until Bitcoin decides what it's going to do. So moving on, I didn't want to talk too much about that because it's, like I said, nothing has changed over the prior week. You can see the candles have just been sideways on the weekly or on the daily. So next I want to go into is clearing up Divergence once and for all for everybody out there. If you're listening, you may have heard about Divergence. What is it? What is it? What I did is I took this particular indicator. Now remember, indicators follow price. They don't command price. They don't drive it. They follow it. So each indicator is going to show divergence maybe a little bit differently than another indicator, but I'm going to clear it up exactly what it is without even using indicators and what divergence actually means. As opposed, because everybody gets focused on these indicators and not looking at the price, and the price will tell you that in a second. So what I did here is I put this on the weekly chart. This indicator is the VQ divergence volatility quality 0 line, long name. And what it looks for when the price is higher, but the indicator is showing that it's going down. In this particular instance, you have the green dotted lines showing that the lows are slowing down. So in order to really understand it, let's just get rid of that indicator, because we know that indicators just follow price, but we're going to keep the lines up on price. So we're going to just don't even look at the indicator. We're just going to look at price. I'm going to show you exactly how this works. And I don't even recall whether it's hidden, the names hidden divergence, bullish and bearish, and I don't even care about that stuff. What I look at is price making a not so high or low than the previous one? And I think that's bullish, hidden bullish divergence when they're looking for the lows when a trend's going up, and then they'd be looking for the highs when the trend's going down. So it's a momentum indicator. It's looking for the price shooting up, and then next time it shoots up, it doesn't shoot up quite as high. It's not as strong as the previous thrust. That's what divergence means. It means it's still going up, but not quite as much as it did before. And that's why it's called a momentum indicator. I don't put a lot of trust in divergence. I don't think it's useful, but without, supply and demand zones are king, and they always will be, especially in markets like this. Forex is a little bit different because there's just a lot more going on. Contrary to some people's beliefs, there is supply and demand going on in there. You just got to know how to look for it, and it acts a little bit differently because it's one currency against another. And then there is still supply and demand of trading, not so much a commodity and a demand. It's trading back and forth. So there's actually two supply and demand dynamics going on in Forex, which that makes it a little bit different, but it's still there. Supply and demand is still in there. And it's just, like I said, it's a lot more going on. So in this instance here, we're getting higher. Here's the higher high, but not so high. That's what the solid lines mean. And then this would be a higher low, but not as high as the previous. It's not going up as fast. So that's all it means. And then in the opposite here, you got a higher low. Oh, see, even I get confused because basically, if you just realize all divergence is measuring is momentum, whether it's going down fast and then not so fast, it's going down, it's not so going down, not so fast. And it's going down. It's still going down, but it's just not as fast. And so it's looking as a momentum and a turning point, whether it's going down or whether it's going up. And so if we can just forget about this indicator, because it's just following price, and realize that it's just looking for that turning point because the momentum is slowing down, or it's looking for this turning point because the momentum is slowing down. And it's a lagging indicator. Again, it didn't even pick it up until here. And I think I bought in around here somewhere. Wasn't even looking for it. So that's why momentum I don't put a lot of weight on it in divergence. It's some people find it useful. I didn't find really that much of a reason for it. So that's all you got to know is that divergence is momentum. Think of it as momentum in the direction that the price is traveling, and that price is slowing down. Whether it's going up and slowing down or going down and slowing down to go up again. That's all you got to know. So that's divergence in a nutshell. So you don't have to worry about it ever again. To me, it's kind of worthless. It's just indicators following price, and you know how I feel about most indicators. Not all indicators, but most of them. So moving on, let's go to Ellipal real quick, and staking on Ellipal. They are staking Atom, and Tezos is coming soon. So basically, it's a delegation type program where you're going to delegate you're not an actual node on Ellipal, that you will be just delegating it. And so I imagine that eventually when Ethereum 2.0 comes out, that they will probably do the same thing, where you'll delegate your coins or your tokens or whatever out. So right now they have Cosmos, and Tezos is coming next, and I'll assume that Ethereum will be on there too, but I'm more looking at what to be an actual node as opposed to, and then maybe even be a delegator, and work my way up, and I have to learn about all that. So that's what that's all about. And finally, going back, I promise, in a hurry, let's go, where was it? Here we go. Here was another good example of the scalpings, the Sydney scalps that I talk about. We had some rejection off the top after the close, and if we got in here, that would have been a nice 26 pips. Maybe we didn't get in there. We looked for the color change and got in here for 10, 11 pips. So that would have been a nice little scalp right there for that day. And for Asia, this doesn't work as well as the Sydney scalps, but this is what I used to do for Asia. I would look for places where price got rejected in this time area, like maybe right here. Here's a good rejection point right here. And then I would draw a demand zone. There would be a demand zone right here. And you put in a couple lines right there. Maybe right here. And then look for price to come and approach that area. Now, I didn't quite hit this area, but we did hit it here earlier, so I might have even taken this zone and put that in. And looky there. Here's a nice little 30 pip move. Probably would have got out about here, maybe 19, 18 pips, something like that. This doesn't work as well as this over here, but it does work. And I made most of my money here, but I have to wait for this box to clear. This is where the Asian news happens, and this is usually when they start clearing out. And so basically what I'm looking for is leftover orders from North American session to bounce from. So you can see that's where that rejection point happened. Is we had a pretty good demand zone here setting up. Got rejected once and rejected twice. It doesn't work as well as the Sydney scalps, but it does work. So you start looking for that. You're looking for these demand zones here, and that was a good rejection point. Maybe down here a little bit lower. Here's another one, but this wasn't in. This was in the where London was still open, so that doesn't count. We discount this from London time open. So there's a lot more money going on here, and there's a lot less money here, so it doesn't take as much to turn the price. You don't have to, the orders are stacked in here. If you watch the Sam Seiden videos that I recommend, just Google Sam Seiden, supply and demand, Forex. You'll get dozens of Sam Seiden videos. Just watch them until your eyes bleed, and you'll be able to do this. This is a very easy system. I did pretty well with it, but my job changed, and I just ran out of time and couldn't do it. So I had to find other avenues. So hope you like what you see. Click like and subscribe. I'm going to have a contest starting next week. So